Hey, here we are, ready for that stock market weekly recap as we do every single week, right? We want to fill you in on the good stuff. As usual, we talk about our portfolios. We go with the Robinhood, recently crossed the 20,000 mark. Love that. And we talk about the M1 right after that. So let's get right into this. We'll get into the indices, how the normal indices did, and then we'll get into some news. So on the week, the Robinhood portfolio was down 0.46. It was down. Can you believe it? Still above the 20,000 mark. We love to see that. Overall, up 40.64 now, or the equivalent of $5,791. And this is as of, or from July 28th of 2017. So this is a little bit past the 3-year mark on this portfolio. So happy to see where it's at. As far as moves this week, let's be frankly honest. There wasn't much. I mean, if you look at this, where is the news? You don't have anything. We do have one move, right? One move here in which we saw myself after a 10% dip after earnings. I only bought one share of Cisco. I should have bought two, but I'm still above cost basis by a decent margin. So I didn't feel like buying two shares. I just bought one, even though it's not much, but nothing major. Dividend-wise, nothing major this week either. The Global X Super Dividend US ETF paid $1.10, which is a monthly payer, which got reinvested for 0.068 shares. And Apple paid a dividend as well of $4.11, which got reinvested for 0.0089 shares. Definitely nothing massive, but we will take it for sure. We will take it. So that's really it for this Robinhood portfolio. It's pretty wild. The M1, which we love the M1, right? This is the one that we're building a lot quicker than we built the Robinhood. So the portfolio's rising at a rapid rate. And there's a lot to talk about with this one. Just kidding. It's another one of those weeks where not much happened. Up 0.51%, brings us all time now, 52.72. Now that is, again, money weighted. If you look at just positions, I'm up 16.8%, or the equivalent of $1,949. If you include dividends, we're up 52%. So good to see that. As far as activity is concerned, nothing major by any means. We had a normal trading session here. Just purchased some stock, as we do. And then we had a dividend from Apple, $2.40. So nothing major at all as far as this is concerned. So yeah, nothing too crazy going on with the portfolios this week. I can't lie to you. I can't tell a lie. As far as how the indices did, let's get into the Dow Jones, which had a massive week, right? This one smacked us, right? It smacked us. My portfolios got owned this week, and I can't lie to you. 5-day of 1.8 on the Dow, which is pretty massive. Year to date, down only 2.13 now, nearly flat on the Dow for the year. That is just seemingly incredible, nearing 28,000. The S&P 500 had another positive week as well, 0.64% up, or 4.4% year to date. Good positive year for the S&P 500 so far. I mean, think about it being a little bit, obviously, more than halfway through the year, 8 months in, really closer to 7, but I guess it's 7.5. So need to think about that. The NASDAQ, on the other hand, was only up 0.08, but this thing is also up 22.8% on the year. So, all things considered, this index really is outperforming everything. I mean, it's incredible. Definitely outperforming me. As far as news, let's get into the news, baby. That's what we do. We start off early in the week where Vladimir Putin, that's right, he says that he has a vaccine against a new coronavirus infection registered this morning. For the first time in the world, they've got the very first coronavirus vaccine. That's what they're saying. Debatable on that one, but I don't know necessarily what you want to think about that and if that's an honest statement at all, but if it is, good for them. We see Tesla announcing a 5-to-1 stock split, 5-for-1. So this is really going to make the shares more accessible to just the normal casual investor. 5-for-1, obviously, meaning one share splitting into 5. So each share is going to be 1/5 the value. 1/5 the value. So at this rate, it's going to be around $300 per share still, which is just incredible. I don't know what's going on with the stock. I can't even believe that. I don't even know. I just think that's crazy that the stock is. Oh my! I don't know how it's going up even off of stock split news. It's crazy. The thing does not stop. We have Moderna seeing a big jump after an agreement with the U.S. government for initial 100 million doses of the vaccine that they're making. Covers up to $1.5 billion of the initial doses. $1.5 billion for this. Quite good money for them, I can't lie to you. Definitely good if you're a Moderna shareholder. No doubt to see that. You love seeing that, right? So, other news. We have a classic college football cancellation, which obviously sparks some concern as far as the NFL's concerned, but some of the, really it's going to be every single conference. Let's just be completely honest. Every single conference will be falling in line and really shutting down their season. So that's pretty much a big hurt to a lot of broadcasting companies, especially companies like Disney, who obviously, broadcast a lot of college sports. It's going to be a big hurt for them, especially with the ESPN Plus. So definitely got to think about that, as sports are still getting hit, and I don't necessarily know the reasoning for it. I can get it, but at some point, we got to live a normal life. You know what I'm saying? People are all about it, but, let them do their thing. These college football players who are in the best shape of their entire life, who have no fear at all of anything from getting this, should probably be fine, but especially if we're going to start paying them. That's all I'm saying. Okay. Apple is creating a TV Plus bundle with CBS All Access and Showtime, supposedly. It's going to be $9.99 a month compared to the $9.99 a month for CBS and $10.99 for Showtime. So how does that bundle exist? I'm guessing it's with ads, is my assumption. That's how they're making that really package happen. I don't know necessarily how they're going to do that. We have Epic Games being buttholes. They sued Apple, saying that it's an unfair environment and they're a monopoly. But now they're also suing Google Play because they got removed. The company is making a workaround. So, in order to be on one of these places, one of these platforms, you have to abide by the rules. So if they are charging a fee to be on their platform, you're going to have to suck it up and pay that fee. Otherwise, you won't be on the platform. So they try to find a workaround and make it so that they did not have to give payment to either Apple or Google here. And they say, get off my platform then. And they kicked them off. And I'm entirely with these two companies. I'm not with Epic here. Because, every single platform like this, and store platform, whatever you want to consider it, every one of them charges fees, right? YouTube charges fees to be on there. The content creators don't get 100% of the revenue. Twitch content creators only get 50% of the revenue. For even places like PlayStation Store, obviously Microsoft Store, these are all 30% fees usually for the most part, just like Apple and Google are doing. So there's nothing absurd going on here, but Epic is just trying to be buttheads, and they're trying to make more money. They want to make more money and not have to pay the fees, but too bad. And I think it's going to end negatively, and they're going to lose these lawsuits. There's no doubt. They're going to lose these lawsuits. Antitrust case, come on now. Can we stop being dumb? But we also saw another positive July video game report, showing a 32% growth there in overall sales, which is nice. Year-to-date is up 21% from same period, time frame in 2019. Hardware sales declined 2%, so hardware sales were down, and I think it's because there was not many products to even sell. I mean, it's hard to get these products anymore, just being honest. And there are new consoles coming out shortly, so hardware should decline, all things considered. Accessories jumped 34%, a July record pace. Year-to-date accessories are up 24%. Content spending rose 34%, and digital content spending rose 41%. So everything from downloadable content to microtransactions within the game. The full top spot belonged to Ghost of Tsushima. Good for them from Sony. Don't necessarily know what the game even is. I'm honest. I don't know. But Paper Mario, Origami King, started at number 3. Holding the number 2 spot was Call of Duty Modern Warfare, still at the number 2 spot, which is massive if you're an Activision Blizzard shareholder. That's all I'm going to tell you. And obviously wrapping off the end there would be Animal Crossing at number 5. That's really what we talk about. That's the news today, and I really hope you enjoyed this one. Road to 1K, baby.